Wait, I'm handling a few things. Okay, so we are in the third week of 2021, January. I hope everyone is making a lot of profits. So currently, so far, all the trades that I take in 2021, right? I have not taken any stop loss yet. I have not taken any loss yet. I'm conveniently sharing you my 2021 trade logs lah. All these are all the trades that I posted on Patreon. Those that hit TP already hit. Their majority still open lah, but none have hit stop loss yet. So yeah, to start off, I will answer Jun Jun Junhui. You sorry if I pronounce it wrongly. So the question is, did Jotun introduce me to trading? So for those who don't, wait, I have not give permission to unmute yet. Sorry. Okay, so you can unmute yourself already. So for this first question, right? For those of you who don't know, Jotun is a very experienced, a very good forex trader. He is actually the trainer and the owner of Sonic Arm Mastery Course lah. So for those of you who know me, right, you probably know Jotun as well. In fact, I think most of you will have known Jotun first before you came to know me lah. So so the question is like how did I get to know him aside from the fact that we are both from Myanmar, but that's not really the main reason why we know each other lah. So he didn't really introduce me to trading. In fact, I started trading way before I know him, and I start from stock trading, and I have always been in stock trading lah. Until now, I have not ventured into forex. I did try forex for a very short period of time. I realized that it's not really my kind of style. A lot of strategy that I use for stock trading, especially the one that I teach in my course and the one that I'm posting on Patreons that you all are following, right? They don't really work in forex. So the way how I got to meet him is that I got to know him around 2015 on a stock trading Facebook group. Back then I share a lot of stuff for free lah, and I think somehow he was in that group also. And then he is giving his Sonic R mastery course. I'm not sure he's giving or not, but he actually came and approached me and asked me if I am interested in sharing stock analysis to sort of as a value added service to his Sonic Arm Mastery course lah. So I actually sort of become his consultant in 2018, where I joined most of Sonic R webinar, and I share some of my stock trade setup and some stock analysis lah. And until recently, I ventured out on my own to start this Nimbus Capital trading course. So I was to answer your question, I traded way before I got to know him lah. But I do think that both me and Jotun, we have similar years of trading experience. I think he probably have 2 or 3 years more than me, but I've been trading for about going 8 years already. Okay, next question from One Thing. Is it too late to go for those trade setup that was shared? Okay, one by one. Is it too late to go in for those trade setup that was shared a week back if some have not done so, such as US Steel, Shake Shack? Okay, so whether is it too late or not, right? You do have to decide that for yourself. So let me just use those example as you type out US Steel and Shake Shack. Right now, okay, so Shake Shack. Bear with me, I'm screening my video, so it's slightly laggy. Okay, US Steel. So for US Steel, you can see that okay, all the levels have disappeared lah. So I think the entry was somewhere around here. The stop loss is somewhere around there. And now the price has come back to our original entry level. So do you want to take this trade? I would say definitely you can take this trade because it is at the original entry level already lah. And as long as the stop loss is not hit, right? As long as you are not near the stop loss or we have not triggered the stop loss, this trade is definitely still valid. I think the TP one is somewhere around 27. I'm not sure. You have to go and check. So in this case, you can definitely take this trade. But the thing is, do you want to take this trade or not? Because almost every day or maybe once every 2 days, there will be new trade setup coming in. So you need to ask yourself whether if this trade setup is worth taking over all the new one. And if you think that the new one are much better choices, right, then you definitely go for the new one. You don't go back to the trade setup that was shared like 2-3 weeks back lah. And the thing is, why if you are not in the trade yet, why would you want to enter a trade that was shared 1 week ago? Is it because do you love this counter so much? Do you like this counter? Or do you feel that okay, I can only trade this counter because I'm on CFD platform, so I have very limited choice of what I want to trade? If that's the case, right, I think that's a very legit reason to look back at counters that was shared 1 week back. But specifically for this case, right, you can take this trade, but what if let's say the TP level is 27 lah, let's say lah. What if the stock go up here, barely hit the TP level and then start to come back down here? So in this case, TP haven't hit, stop loss haven't hit, but do you seriously want to take this trade or not? I think it will not be a wise choice lah. So for those who are already in this trade and still holding, right, then they can still definitely continue to hold. Probably a while more, it can go back up, but you will never know. Also, maybe it might come down and hit the stop loss. We can't really predict the future, but if you are not in the trade yet, right, then you might as well go and look for a new trade that was posted very recently, because this chart is no longer as attractive as it was when I first posted it. So let's look at Shake Shack also. So Shake Shack, the entry that I given was, I think here or maybe here, I forgot already. Let's say the stop loss is here. So your currently price is still only a bit higher from the original entry. So if that's the case, right, once again, you can take this trade. But the question you need to ask is, now that the price is slightly above your original entry where I post the trade setup, are you able to handle this a little bit of increase in price or not? If you can take the trade. But if you can't, then you might as well wait for a new trade setup. Because there, as I always emphasize, right, you will never run out of things to trade. There will always be something running every day, and I tend to post quite frequently. In 1 month, right, I made about 30 to 40 trade setup, which is more than what your capital can handle. And also I try to have quite a good variety. So for example, now Singapore market is running, right, I tend to post more Singapore stocks often. Sometimes I will switch my gear to Hong Kong, sometimes US, but I try to have a good mixture lah. So if you miss the one trade, right, you don't have to feel FOMO or what. Always wait for the next trade to come in. Personally, what I do is you can see from my trading this spreadsheet, all these ticks, right, are trades that I take personally. And you will realize that at one point, right, I stopped taking trades altogether. Why? Because I run out of capital. Then eventually when I start to TP, right, I have my capital coming back in, right, I don't go back to look at previous trade and I enter them, but rather I look out for new trade. For example, I entered DBS, I entered Lion OCBC, I entered Jiutian Chemical. I don't go back and enter US Steel or STI ETF or ISDN, but of course in this case, ISDN run up very fast lah. So there's a lot of unknown, and you really do have to, I would say, decide for yourself lah. Okay, next question. Let's go to next question. Can you show how you manage trade beyond TP2, and how do you decide when to close a trade altogether? Okay, so TP taking profit strategy are very, very tricky business because it is very hard for you to take profit at the top. Uh, you have, because TP price is price that is going to be happening in the future. No matter how good of a trader you are, you can never predict the future accurately. Meaning there is at no point you will be able to take TP at the top. If you do manage to do that, it is more of luck rather than your skill or your analysis. So the best you can do is you can trail your TP. Meaning when the TP hit, when your price hit TP1, instead of taking profit fully, what you do is you can take a bit. Maybe you can take 50%. Then you will have a remaining 50%. Then when it hit TP2, that 50%, you can take 25%. Then leave that beginning the remaining 25% there. And eventually when that 25, the remaining 25% went up some more, right? Then you can close off everything altogether. And by then you probably have about 30 to 40% return on that one trade alone. Who knows, it can go up some more. But if that's the case, right, then whether or not you continue to hold is really up to you already, mainly because the remaining 25%, like is not so much ready, but at least you manage to trail for the majority of the trade. Or the second way you can do is this one I'm just suggesting. You don't ask me how to exactly shift or when to exactly shift, mainly because this is not what I do. I trail my TP, but you can also do this. So when it hits TP1, okay, let me bring up a chart with okay, so 九天 chemical. Okay, so now my stop loss, suggested stop loss is at 0.063. So when the price hit TP1, right, you can probably shift your stop loss to somewhere, lock some profit. Then when the price goes up to TP2, you can shift your stop loss higher. So you keep shifting your stop loss and locking profit as price go up and up and up. But of course, this will invite follow-up question. When do we start shifting? Do we start shifting TP1 or TP2 or all these? A lot of follow-up question. That is, it is not part of my strategy, so I cannot really recommend you because I don't know. I don't know the exact number that you should be doing. So you really need to go and figure that out for yourself. So more often than not, what people face is that after price hit TP1, you profit you exit everything, then you realize that everything is still running out and you miss the opportunity to hold. So what I can recommend in that case is that you simply just take profit partially lah, and the remaining, right, remaining when it hit TP2, whether or not you want to profit exit all your remaining, it is still up to you. But personally, I trail everything. I trail all my TP level lah. And how I exactly manage my profit taking strategy, right? Like I say, I cannot reveal that to you because it is taught for my course only, and it is a strategy that my course trainees they are using lah. So for this case, right, unfortunately, you have to figure that out for yourself. And of course, taking profit is a good problem to have because you are winning lah. You are winning money like just how much you want to win. But as I mentioned previously, right, if you follow all my trade and you exit everything at TP1, right, you will still be extremely profitable at the end of the year. Next question from Eugene. You exited Lithium America at TP2 and missed the big bull run. I also exited ISDN at TP2. Any advice? So same thing that I have mentioned just now. You should trail your TP. Don't TP everything all at once, but rather trail it bit by bit. But this trailing strategy, right, you have to be very, very careful. Because if you are on local brokerages, even on CFD brokerages, right, their commission is very high. $25 for local brokerage. If you are on certain CFD brokerages, right, it costs you $10. So if you trail like this, right, I can tell you that your brokerage fee is gonna add up a lot. which is why I highly recommend Tiger Broker, because their brokerage fee is really dirt cheap, like really dirt cheap one, like $1, $2, that kind of cheap. So you can afford to make all these kind of multiple trade trailing strategy, or all this is very easy. It doesn't cost you a lot of money lah. So for those who are on local brokerage that charge you $25 commission fee, or I highly suggest you get out and go and set up a Tiger account. Tiger account takes very fast to set up, and the transferring and withdrawal of money is very safe also. I have tried withdrawing money from $1,000 to $30,000 to $50,000, and I get the money back within like 1 day. It's a very fast process. Okay, next question. Is your strategy long only? How do you trade in bearish market? Can you share your trade experience in the last crash, Feb and April? Okay, so currently, definitely my strategy is not long only. There's a bearish side to it also. I do short the market, but shorting requires a brand new strategy, and the scanner that I am giving out, because currently, as you all know, right, all my trades come from my scanner. So I only trade counters that shows up in my scanner. I don't go and go into other people forum, look at what they trading. I don't look at news report. I don't look at brokerage report, bank target price. All these I don't look at them. I only look at my scanner. So the scanner itself, right, is not set up to execute short trades. So there's actually another scanner that is for shorts only. And as of now, shorting is quite risky, because the market is actually, I feel, in a quite bullish state lah. And those who try to short, right, tends to burn quite badly at the current state right now lah. So definitely when the shorting experience come, when the time for shorting come, right, I will start to share short counter also. But definitely I do short, even though not often lah, not very often I short a lot, but there are times where I do take short trades. So I can show you some of the short setup that happens during the earlier this year. So I managed to short two counters earlier this year, which were SIA and Keppel. I'm going to a weekly time frame. So the short entry for my Keppel, right, it came out somewhere here. It came out somewhere here. So you can see that I actually I chose not to short the first week when things start flying down. So a lot of mistake that shortists make, they try to short the top. They try to short the top, and then they end up getting very burned. I mean, these are very bad examples lah, but currently now you have okay, I myself is guilty in the past, but I no longer do this. But even right now, you have people trying to short Tesla at the top there lah. So which is why when the counter is in very big strong uptrend, right, you don't try to short the top. Sure, you might get that a bit of money from that shorting, but it's never worth it. If you keep doing that, right, in 100 trades, you are going to burn like 70% of the time, and that 30% that you win, right, is not going to enough to recover back your 70 losing trades. When you trade, you need to think long term, because trading is not lottery. You make one big win and then you stop buying lottery altogether. Trading is a lifelong process, and you need to look at things in terms of large numbers, large volumes, large number of trades. Okay, so number one, I don't short the first week. It's the same trading strategy as my long position. You don't see me trying to enter at the bottom. I let that first bullish candle happen, then I enter the subsequent one. So I don't try to enter the first bullish candle. So same thing here. I managed to short here, and then I exited at somewhere here. I exited at somewhere here. Sorry, my mouse is like, okay, I shot somewhere here and I exited somewhere here. So I don't catch the bottom also. I wait for a bit of recover and I see the strength behind the recovery lah. And then I managed to get this stretch here, which is about 20%. So if you look at it, right, it's not really a lot. Some of my long position have more than 20% profit lah. But shorting, behind shorting, there's a lot of leverage involved. So when I short, right, I take a bigger risk and there's a much higher leverage there lah. And you cannot short without margin or leverage account. So leverage is definitely involved lah. And nextly, the next short is from Keppel. So what you can see from both of these counter, right? They are already in a downtrend. They are already in a downtrend. So I don't short uptrend counters. They are already in a downtrend. So when people talk about market crash, right? They short at the top and then they pray for the crash, which is definitely a very, very bad way to go about it lah. You don't short at the top and then you pray for a crash. So for Keppel, I'm not sure where did I shorted. I can't remember already. I shorted here. The breakdown of this. When it break through here, right? I shorted here and then I took profit somewhere around here, this portion. So there are definitely so this is about 20% also lah. So there are definitely certain criteria to be met before you short. You don't just anyhow short. Shorting is a lot more riskier than going long position. But when the time comes, when the time to short comes, you will definitely see me posting short counters lah. As it is right now, it's not really the time to short yet. Despite what people say about COVID-19 lah, the US election lah, all the geopolitical uncertainty here and there, I don't listen to fundamentals. I don't listen to news. Even if all these are true, I don't predict the top to short. I wait for the first down move to happen. Then I short the remaining one. Okay, next. How many counters do you, okay, this is from Lin. How many counters do you usually hold at one time? How do you get the TP levels? The getting TP level is confidential. I can't share, sorry. But how many counters do you hold at one time? Okay, so every counter I risk 1% of my total portfolio. Meaning if I have $1,000, $100,000 account, every counter I risk $1,000. Sorry, if I have a $100,000 account, every counter I trade, I risk $1,000, which is 1%. So I hold up to a maximum 20 counters. Why 20 counters? Because if, let's say, all my open position hit stop loss, right, I will at one time will only lose 20% of my entire portfolio. So that's how I come about it lah. If you are risking like 2% per trade or 3% per trade, then you might want to reduce the number of counters that you hold at one time. So my personal advice is do not risk more than 20% of your entire portfolio. If you are on a CFD account, right? If you're on a leverage account, try to be careful because it's very easy to hit that 20% number. Why 20%? Because if you lose 20% of your portfolio, right, you still have 80%, and that 80%, right, is easy to get back that 20% that you lost. So for example, I have a 100K account, I lost 20K, I'm left with 80K. It's very easy to use 80K to get back that 20K. But let's say you have a 100K account and you lose 50K. So in order for your remaining 50K to get back to 100K, right, you need to double your current account size, which is 50K. And that is almost very hard to do it within like the next 2-3 trades. Whereas to go from 80K to 100K, right, it can be done in like within 1-2 winning trades lah. So those of you who are risking a lot, this is a fair warning, because in my Patreon introductory post, right, there is a post that teach you how to calculate how many lots you should play. and make sure you follow that. If you play more, right, you are going to risk a lot of money. And definitely when market start to turn, you will have a few counter here and there start to hit stop loss during the early sign of market turning, right? Because we can never predict when market turning, so there's no prediction involved, but you will start to have one or two counters or maybe three or four counters start to hit stop loss, and then you will start to feel that, hey, something is not right, market seems to be doing bad. So those are signs that market is going to turn. And when that happen, right, you do not want like 20, 30 counter, everything hitting stop loss as one. When there are market news such as stock dilution, this one is from Marcus. When there are market news such as stock dilution, what will be the appropriate approach to manage the trade? For this case, right, what I do, I can't recommend you what to do, but I will tell you what I do. When such a thing happens, if I'm already in the trade, I exit before all these action take place. So I need to check the news on when are these action taking place, especially rights issue. Rights issue is a very, very damaging thing that can happen to your trades lah. So when rights issue come in, right, I will exit before the X rights date. Or let's say you are not in the trade yet and there are such news coming up, then I avoid the trade altogether lah. Because trading to me is meant for short term. Even though some of my counter get stuck 2-3 months, right? When things like stock dilution or rights issue start to happen, right, then I will exit the trade lah. So it's good that you brought this up, because this is one of the extremely rare exception where I will break the rule of sticking to stop loss at all costs lah. Junhui, is it possible to identify from scanner, or are there characteristics such as traits like ISDN and LAC? Okay, so the scanner is not capable of predicting counters that run up like 80%, 100%, such as ISDN or LAC. The thing that will make sure you can get those trade right, it is not the scanner, but the scanner does able to churn out trades that can run up like this, but it is at a probability of, let's say, 10%, 20%. Currently, I have 11 trainees in my course. 4 of them managed to catch trades that run up about 100%. And these counters are counters that I also posted in Patreon. Fuel energy, clean energy cell. DDD, I did not post, but one of my trainee got it. GameStop, I didn't post also, but one of my trainee caught it. So when they caught these counters, right, it is not, they are from the scanner. Definitely they are from the scanner, but it is, they managed to catch those big trades, not because they predict that the big move is coming, but rather when they enter, they place their stop loss nicely in a way where before that big move come, right, they are not stopped out of the trade. So when the move come, they are still in the trade. So for most people that I know, right, especially ISDN, let's look at ISDN. ISDN, let's say you are at this point. So there's nothing here that you can predict that can tell that big move is going to come. Because I can tell you, if you can predict that, right? If you can predict that's gonna happen, right? What you can do is you can go to the bank and take out like 100K loan. Then you'll be like a billionaire. You'll be a billionaire the next day already. There's a reason why there's not many billionaires running around here, because there's no way we can predict that. Definitely there will be a lot of people entering the ISDN trade here. Maybe some enter here like breakout, someone enter here breakout. But whether or not they can catch this whole thing, right? Can they stay in the trade when this happen? If you enter here, can you stay in the trade when this happen? If you enter here, can you stay in the trade when this happen? Most likely no. Most likely drop a bit, like a lot of people panic already. Like you see Razer what happened? Just drop like a bit yesterday. A lot of people panicking. I mean, you won't see that on my Facebook, but on my Patreon, right? My Patreon message board, I can tell you, like a lot. Oh my god, Razor, what's happening? Like this or that lah. Then imagine you see this kind of drop happen. Are you able to hold on to the trade? That is why, right? Many of my trainees are able to catch those 100% trade because they follow one very simple rule. That is, do not exit the trade when it doesn't hit the stop loss. And of course, your stop loss also have to be strategically placed, meaning they did not, when they enter trade, they did not place their stop loss here, but rather in a very strategic place. So you can go back to the Patreon of my RSDN and you see where I place the stop loss. It is placed there for a very good reason. If it not weren't for that stop loss, right? Let's say if the stop loss was anyhow placed, let's say I tell you, okay, you wait, let me let's say I am another guru pattern, not referring to anyone lah. Let's say I'm a different type of guru and I tell you, okay, ISDN going to go $1 already. Everyone buy here, buy here. You can chong everything here. You see like breakout. Then everyone buy like 100 lots, 200 lots, 50 lots, and then the stop loss never placed. The stop loss you anyhow place. Then after that, what happened? When this happened, then everyone blame me lah. Alama, you say we'll go out $1, where go out? Like now come back already. So this kind of gurus are like eventually maybe their prediction is correct, but the thing is, so what if their prediction is right when most of the traders that follow you are not in the trade ready? So which is why I go by another method. I will tell you that you do whatever you want, but you follow my stop loss. As long as you follow my stop loss, you will always be able to catch if the big trade come. If the big trade doesn't come, you will still be able to catch a bit of profit. But if it comes, then it's a bonus. So that's why the stop loss level is extremely important, and it is a big reason why majority of my trainee managed to catch 100% trade. Like 4 of them, they managed to catch 100% trade even without me telling them what to trade and where to put the stop loss. So if I let this run, yep. So I personally know about 6 or 7 people who exited the trade before this happened. Okay, next question. Wow, this one is a long one. Okay, JHO, what do you think of trading cheap penny stock which are not fundamentally strong and run the risk of delisting? What is your view? I don't trade cheap penny stock. My if you notice, my scanner will never give you counters below 5 cents. Even for penny stock, most of my scanner give you like 10 cent, 20 cent, but never below 5 cent. I don't trade them lah. I don't trade them mainly because of what you said. They have the risk of delisting. They are not fundamentally strong, and I don't trade them at all. So I can't provide you information on how you can trade them. Sure, once in a while you have some those crazy one like from 20 cent go up to like from 2 cent go up to like 20 cent, like 100% return like that. I am perfectly fine with missing those trades when majority of the time I run the risk of getting delisted lah. So you always think in large numbers, the law of large number, because you are going to be trading for a very long time, right? So let's say if you keep buying penny counter, maybe you will get lucky that 1 or 2 times you get 100% return from that one penny counter. But what about that 80% of the other time? You are going to get delisted, your account stuck there, your capital stuck there, then you have to go and find your broker to how to get your capital out. So I don't think all those trouble are worth it lah. That's why I mentioned that trading should be a very should not be very stressful. Yeah, I will not go to say that trading should be relaxed and fun. Definitely there are stress involved, but you do not make things extra stressful yourself by getting yourself involved into this kind of thing. So when something from 2 cent went up to 20 cent, sure, those people who caught it celebrate. There will be big news, everyone in Facebook shouting here and there, who caught this, who caught what. But personally for me, I'm not going to get involved with myself to get that kind of profit, because I can get that kind of profit from somewhere else that is perfectly even safer lah. What do you from CK? Which do you prioritize more based on your system? Win accuracy, RR ratio. In your past video, you show some trader RR 0.7, 0.8, but high win rate. Notice some of your trades setup TP1 are usually lower than RR, so I'm contemplating to chase. Okay. The account that you saw, the RR ratio, they are just I don't think the RR ratio that is listed in their account is the RR ratio what you are referring to, because the risk reward ratio that you're thinking is probably your stop loss to your profit, to your TP level. So if your stop loss and your profit level are like the same, right, then you definitely have a 1.0 RR ratio lah. But what you see in that account, what you see in those trade journal, they are close trades. They are close trade, meaning right, my students can only lose one trade and they will have a R. My student can lose one trade but win 99 trades and they will have a R ratio of less than 1, because that one trade that they lost, right, it is slightly higher lah, but they have like 10 winning trades that is around maybe a much slightly lower profit lah. But the thing that you're not seeing in detail is that once in a while they are also having very big winning trades, and these winning trades are not computed in the RR ratio because the risk reward ratio is not based on the stop loss. It's rather based on it's not based on the stop loss, the trade setup that we set, but rather the loss that they take. So in a way, the risk reward ratio is not really what you are thinking of lah, where stop loss to your so-called profit lah. So in my current trading system, right, most of my trainee, even myself, our win-loss ratio is about 60%. There are better ones who manage to get 80%, 90%. But as I said, it's mainly because they also have a lot of open position that they are holding that they have not closed out yet. So eventually you need to like maybe wait for about 2-3 months worth of data before all those trades start to close out lah. So our win-loss ratio definitely is somewhere to 60 to 70 like that. But most of our trading system, right, we have a very specialized profit taking strategy that is not shared as part of the Praetorium, because it is one of our core strategy lah. And in this core strategy, right, it is the main part that allow us to take trades, take big trends such as high P. Most of my trainee managed to catch high P from a very small trade to all the very like catch the entire trend lah. And there's another thing about that. There's another thing that the trade journal is not really accurate also, because how we trade, right, the way we take big trades, right, is we enter exit, enter exit, enter exit. So when you enter exit, right, the journal take all these at one single trade, but multiple single trade rather than one very big trade lah. So what you have is you have like maybe I have 20 high P trades that comes up, but to me it's like I'm catching that high P trade for that one big trend, but the trade journal will take it as 20 separate trade together, so it comes up as a very high ratio and it does not compute the whole thing as one trade lah. So the trade journal that you see in the video, right, is slightly not as accurate, not as a good representation of how our trading strategy works lah. So if you want to talk about it, right, my strategy have include very a lot of counters that we do manage to catch the very big uptrends. Some of which you can see is from last year. It was high P was one of them. Franken was one of them also. And there are other trades also which currently I cannot think of lah. But even right now, we managed to catch Hong Leong also. Hong Leong, we managed to catch that big trend also. So I'm sure there will be much more example this year coming up, but those are the ones that I can think of. Pertaining to your posted trade setup, if price drops so much the next day such that it is lower than your suggested second entry, it is still considered a bargain buy. I will still buy it. So I'm not sure why. Let's say if it drop and hit the second entry, right? I will have bought it ready. So if you miss, so the way I'm looking at it is that when it hit the second entry, is it because you didn't buy it because you scared to buy, or you waiting for it to go up first before you buy? I'm not sure what's the situation is there, or maybe you are busy with your work, you didn't see the price. Then when you see the price, it's like way below the second entry already. So yes, I will still consider it as a buy. So if let's say but the thing is you must plan for your second entry. Like, it is not like you enter the first entry, then you set it at 2% risk, and then when it hit second entry, you were like, okay, I will go in another 2% risk. So now you are like taking two trades like that. So when I plan to make multiple entries, right, from the beginning, I will plan already. Okay, I'm going to enter 1,000 shares, but I'm going to split it into 500. So I plan it from the start. So the moment the price hit the second entry price level, right, I will go in my plan lot size lah. So that's how you should enter. So you should not enter like, okay, I enter 1,000 shares. Then after drop ready, then you start to think, should I enter again or not? So now if you do that, right, you are averaging, you are doubling down, like you are taking the risk of two trades. So how you should do is you should split out your entry in that. If you have two entry, those two entry add up to the risk of just one trade. So as long as it doesn't hit the stop loss, I will still go for the second entry lah. How do you select counters for trade setup that you have shared? How do I think how do I select the counters? They are in the introductory post. There's a post that I sort of label it, how do you pick counters from scanner? So you can go and take a look lah. To summarize, right, I look at two things. So I'm going to use ISDN as an example. Okay, sorry. I choose other stocks, but because ISDN a bit biased because everything run up already. So I'll choose a counter that have not run up yet. Okay, which one should I choose? Okay, this one, Johnson Electric. Price run up a lot already. So number one, it must be an uptrend. Number two, the closing of the candle must be very nice. So I want a very good green candle closing, very nice one. I don't want like this kind of pin bar or like gap up bar close down. So I want a very clear cut bullish candle. And best is if it break through resistance. So if you look at all my trade setup, right? So all these are my trade setup. Excuse me. I actually put the justification there. So you can see the justification, but it will always be the same thing lah. So rebound from support with good momentum, or you will see this breakout above resistance with strong momentum. So resistance, breakout, strong momentum, good candle, uptrend, I take the trade. So this one very simple lah. This one, even without me telling, it should be how everyone should be taking trade lah. Follow the trend, follow bullish candle, then that's it. The only thing that the scanner is helping you is helping you dig out all the good counters, good bullish candle with good momentum lah. Next one, if price further drop after second entry, is it good to further average down? If price drop after second entry price, is it good to further average down? I mean same day after second entry based on that. If you already plan to make that averaging, right, then of course definitely yes, as long as it doesn't hit the stop loss. But if you do not plan for it, right, I suggest you not to keep adding additional risk to the trade. So let's say I plan 1% risk on Johnson Electric H, and I sorry, let's say I plan to take 1% risk on Johnson Electric H. So let's say I enter here with 0.5% risk. Then I enter here with 0.5% risk. So my 1% risk is up. Then if price further go down to entry 3, I will not go and enter another position to increase my risk ready, because that is not what I plan for. So make sure you plan everything first and then follow that plan. The most important thing is how much risk are you going to take for that trade, and plan out that risk. If let's say I enter 1% here already, right? Then when price go down, right, I'm not going to enter some more here. I'm not going to enter some more. I have sort of used up my 1% risk at the first entry already. Okay, seems like, okay, wait, there's still got some more. During 2020, were there much less stock in your scanner, and were there still long opportunity, or you just stay out? So this one, right, I mentioned once in my webinar. I think if you all are here, right, you all should be in the webinar also lah. So when the market is bearish, or when the market is sideways, not suitable for going long, the scanner will stop giving you counters. So normally in a bullish state, my scanner will give a lot of counters. If in Singapore market, my scanner tends to give 10 counters every day. Average lah, 10 counters, 10, 12 counters like that. US market will give a lot of counters, up to 30, 40 counters. Hong Kong market sometimes can give up to 20, 30 counters. So these are the average counters that I get every day lah. But of course, doesn't mean that all 30 counters are worth trading lah, which is why I post those that I think are worth taking the trade. But when markets start to go sideways, or when they start to turn bearish, right, the scanner will start giving lesser and lesser counters. So the moment I see that US market this today only give me 3 counters, then I will have alarm going in my head already. How come US today only 3 counters? Is there something wrong? Or on Singapore, even worse. On Singapore, during bad trading times, there's 0 counter one. There's nothing showing up in the Singapore scanner at all. So in the past, right, if you all been in my Patreon during the very first time it started, right, around October, November, like that, you will notice that there are some days Singapore's nothing one. There's nothing there. So if the scanner stop giving a lot of counters, and for a period of 1 or 2 weeks, there have been very, very few counters, I start to stay out already, because it is a sign that maybe something is not right. So the scanner itself, right, it tells you a lot of things, not just tells you what stock to trade or what to do, but the number of counters that shows up in the scanner is a very good how to say forward sign that you can use to determine whether if market is going down in the future or not. So as the scanner give lesser and lesser scanner, I will try to be more and more cautious, which is why I always say don't force a trade. There are people that I find very funny, that like sometimes the scanner doesn't give counter, they will be like, yeah, I pay you $10, $20, why the scanner never give me any counter? It's not giving you counter because you cannot, the market is not suitable for trading, and it's like it's telling you that. So you don't think of it as, okay, I'm paying this subscription, so I must trade every week. So try to avoid that, and you will realize that the scanner give you a lot more information than just counters to trade lah. And if you combine the scanner with the fund flow, right, you all see my fund flow I post every webinar. Both of them combined, right, they give a very, very accurate picture of what's going to be happen in the future. So currently right now I'm still bullish on Singapore stock, mainly because you all can see from my weekly webinar that the fund flow for institutional in XGX is still very much positive. Not only that, Singapore scanner still giving quite a good healthy number of counter every week. So which is why I'm still quite my bullishness still remain in Singapore counter lah. And only when it start to the fund flow start to goes negative, the scanner start to show lesser and lesser counter, then I will stay out already. And of course, if I start staying out, if I start seeing all these signs, right, you will definitely be informed lah. Understand your goal sheet. You indicate 4% yield from STI ETF. Able to advise if we can use other dividend yield. Definitely can, definitely can. You can use whatever portfolio you want that give a good yield lah. I use STI ETF is just an example lah, and not only that, because I'm personally also using that lah, mainly because I use that in the past. I'm mainly active in Singapore counters, so I just stick to STI ETF and it is able to fulfill my goal. Thus, I use that. If you have other highly diversified unit trust or portfolio that give you better yield, right? You are free to take it lah. The reason why I take STI ETF is also because back then when I first started, I don't have a lot of money. I can only put in like $500 a month. So what I do is the Philip Capital, right? Poem, right? They have a money share builder plan that I can make use of with very low commission fee, and they have STI ETF available there lah. So that's how I first started lah. And until now, I'm still investing about $1,000 every month into that. Okay, aside from shorting counters at the wrong time, are there other mistakes you have made in the past and would recommend for others to avoid? Okay, so yes, definitely. Number one, do not take more than 5% risk per trade. If you take more than 5% risk per trade, right, I can tell you there will comes a time where you are going to lose consecutive like 4 or 5 trades in a row. That happened. Even me, even right now, I have faced situation where I have to cut loss about 5 counters in a row, 5 trades in a row. I cut loss. Imagine if each of the trades I take 5% risk, 5 trades meaning 25% already, 1/4 of my portfolio gone. And I'm considered very seasoned trader where I am emotionally stable to handle that. Imagine if you are a beginner and you see 1/4 of your portfolio gone, right? Is not something that is easy to take lah. So which is why I recommend never more than even 5%. I feel that's a lot. I personally take 1%. So I do recommend 3% risk. I think I take my word back. 5% is a lot. And no matter what, right, I can give you a few statistics. So my current winning rate now is 60%. I win 60% of the trade I take. And at 60% winning rate, right, there is a very high probability that I can still lose 6 trades in a row. In fact, that percentage is about 20%. Meaning if I keep trading and trading, right, at one point, right, I will hit a situation where I lose 6 trades in a row. That point will come sooner or later. It is a pure statistic probability calculation lah. So it's like rolling a dice. Every phase will come up 10% of the not 10% lah, 18% of the time. So it is pure mathematics. At some point, right, given your winning rate, at some point you are going to be faced with a consecutive loss. When that consecutive loss comes, no matter how good your technical analysis, no matter how good your strategy, whatever stuff you use, right, that consecutive loss will come and you need to ensure that you can survive it. Number two, always stick to your trade plan. Never ever shift your stop loss when you are already in the trade. Once you are in the trade, right, leave it as it. Don't try to like edit anything, because the moment you are in position, you are no longer objective. You are invested. Your mind will start to play tricks on you like, this one can still go up lah, shift the stop loss lah, I can average down lah, this and that. No, don't ever do that. Once you are in the trade, stick to it, stick to your plan, and that's it. And second and third one, don't focus on entry, focus on stop loss. Your stop loss will save you a lot more time. A perfect stop loss will not only save you a lot of losing trade, it will also make sure you have a lot of winning trades, because a good stop loss prevent you from prematurely being whipped out of your trade. Whereas a good entry, right, it doesn't give you anything. A good entry at most give you $100 more profit, $200 more profit. But what are those? Because a good stop loss will make sure that you are in the trade when you could have stopped out, and that could be $1,000. Whereas a good entry is like, so what if you enter at the low? It's good entry is overrated. From JH Yo, how could you confidently rely merely on technical analysis without following markets? How could I? So this one, right? I can't give you a very satisfying answer that you are looking for, mainly because it has worked for me for about 7 years. So if it works for me for 7 years, and I have been through, I have been through two market correction, two very big market correction. Number one is in 2015. Come on, I show you the chart. I've traded for 7 years. I've been through two major market correction. One is here. One is this portion. So during 2015, market actually retraced 27%. And of course, during COVID, market retrace 30%. So I've actually survived this too, and so far I'm still doing fine lah. And not only I'm still doing fine, my account is still way higher than when I first started lah. And bear in mind that my short sell position that happened during these two trades, they don't really account for a lot of profit in a grand scheme of things lah. Over a long period of time, the profit I made from this short selling is not really so much. And the thing is, if what I'm doing is working well, that I can survive these two, right, then I just stick to it lor. So I mean, I don't really know what making it works lah, but I have a plan, and my plan works for 7 years, so I'm just continuing to follow it. So the thing here is that I can tell you when markets start to turns, right, for example here you can see when market start to turns, right, so definitely technical analysis, I'll be bullish here, I'll be bullish here, buy, then suddenly start to turn, then probably I probably get like a few losing trade already. I will start to get a few losing trade. Maybe I get a few stop loss here, and then I realize that I'm losing like quite often lately. And okay, this one bad example because I don't have my scanner here then, but in okay, I should have used the COVID period lah. My bad. Okay, so this is the COVID period. Okay, so bullish here, buy, profit. Then suddenly I have something that cut off. I get like 3 loss, I get like 4 loss, and then I realize my scanner stopped showing counters. And then I start to be more because my scanner stopped showing counters, right? I start to know that my scanner isn't giving me good trades already, so I'm not gonna trade. Then I stop trading. Then after that, 1 week later, right? 1 week later, when this happened, my short scanner start to show me that everything is dropping. Then I enter the short. So the thing is, when it comes to technical analysis, there will always be a point when market turns, right? You will be hit with the stop loss. So you cannot have the perfectionist idea where I die don't want to lose. I die must not lose. If you do that, right, what you end up is you end up predicting the top, you end up predicting the bottom, and you end up losing more. So normally I'm happy to take this loss. If I can get all the profit here. So after I take this loss, right, then I be more cautious a bit, right? Then I'm no longer losing already. So the loss that I taken here, I can tell you, as I told you, right, I take 1% risk per trade. So if I hit with 6 stop loss in a row here, right, I only lost 6%. So that's perfectly fine as long as I don't overtrade. So what happened with a lot of people is let's say market going up, then most traders start to predict that this one top already going to fall, and then they stop trading altogether. So let's say they scared that price might fall like that, and then they lose this amount of money, so they stop trading altogether. But what happened is market always go up, go up, go up. Market continue to go up, go up, go up, go up, and then they miss all these trade. Then eventually, right, market will still fall. When market fall, right, never mind. I will be hit with a few stop loss here, but I still gain this whole bunch here. Whereas those that stop trading altogether here, they will miss this bunch here. So those that are like more comfortable with taking that a bit of loss when market start to turn, right, they will definitely earn more profit than those trying to predict the top, those trying to short the top to get this, get that, but end up they lose more lah than someone who just follow the trend. So what you realize is I will never ever pick the bottom, or I will never try to pick the top. I enter here, I enter my long here, I enter my short here. Whereas those fundamental, those follow news, they try to pick this and pick this, but end up they end up getting burned very bad lah. Okay, so I will answer one more question since no more question already. Okay, I will answer one more question, then we'll call this session closed lah. Any more? No more? I'll give you 1 minute to type while I drink something. Best trade, high P. High P was my best trade. I might show you. I'm very proud of high P. No, I'm very proud of high P, not because I earn a lot, but I know a lot of friends who are in the trade also, because I every day shout. They shout until they cannot take it. They're like, okay lah, I enter already lah, stop shouting lah. So this one most of you should know already lah. High P privatized at $2. So the very first trade for my high P came in here. The very first call lah came in here. Then after that, I made another call here, I made another call here, and then I made another call like somewhere here, and then the last call was like here. Then eventually everything was privatized here. So in my whole entire stretch, I made over 6 trades on high P. And those 6 trades, right, it will shows up on my trading log as 6 separate trades, which is why you will see the risk reward ratio very low, because it doesn't take this whole trade. And the thing is, every time I make an additional trade, right, I'm still holding a bit from my previous trade. I don't TP everything, I don't take profit everything. So end up this whole stretch, right, I gain about $40,000 lah from this one trade, alone. Okay, worst trade. Let me see, what's the worst trade? Okay, so worst trade, right? I don't define worst trade as losing the most, because I will never lose the most. My loss are always 1%, 1%. But how I define worst trade is price going like that. Then my stop loss is here, and it hit my stop loss. Then after that, it start to chong back up. So I will consider that as my worst trade. So I think there are definitely 4 or 5 counters that fit into this category, mainly because I placed my stop loss wrongly, and I can't really remember those counters. I think there were a few US counters that fit into this, but I can't remember their name lah. But in terms of worst trade, right, if you want to count by the amount of money I lost, right, I always lose the same amount. I don't lose different varying amount lah. So I will define worst trade as this kind of pattern. Hit my stop loss, then start to go back. And there are definitely about 2% of my total trade that are in this category lah. Okay, I think that's all for this session. So I'm hoping to do this every week. Every month one time lah. Hopefully on every 3rd week lah. Okay. So the recording will be uploaded. It will be available publicly. I'll post in Facebook, Patreon, wherever lah. So thanks all for coming. Have a good night. Bye bye. Continue to what